So the old saying goes, don't fight the Fed, which means simply that if the U.S. central bank wants markets to go up, then you bet that they go up. If they want markets to go down, you bet that they go down. The Federal Reserve's apparent control of markets is, if not absolute, then let's just say extremely compelling. And most traders who bet against the monetary authority over the last dozen or so years have ended up losing. But is that still true? The U.S. central bank has been very clear since they finally acknowledged about a year ago that inflation, under their purview, is running out of control, even by official measures, and that they want to deflate the bubbles and bring down that rate of inflation. According to the Fed, market conditions will remain bad until next year, and increasingly, it seems like the market doesn't believe them. QCP Capital has a new note out this morning suggesting that with markets rapidly rising, much of the Fed's efforts are now at risk, saying in part, quote, while we wrote in our first market update of the year that NFT prices were a sign of a broader rally to come, we do not expect those to be sustained while the Fed is still on the warpath against inflation and all the assets that feed it, end quote. Bottom line, the Fed needs traders to believe them in order for monetary policy to go the direction that they ostensibly want it to go. And those traders sort of increasingly don't. So what to do? It's a big question. Will, to you.
Yeah, I think the question here really is this a bear trap or a bull trap, right? Like, is this going to go up and continue to go up, or are we going to see Bitcoin's price go down? Like, that's the question we're going to be focused on CoinDesk at the very least. Of course, there's a broader swath of financial products out there that you can purchase, and they trade, a lot of them trade based on what the Federal Reserve is doing. Are they going to continue pushing interest rates up? Are they going to drop them? Are they going to continue steady? And we have a lot of different indications that the Fed right now wants to continue raising interest rates at least a little bit and then hold it steady around 5% as like the terminal rate. And that could change a lot of things in the landscape over the next few months. I think at the very least, it's going to not change things as it has changed in the last 12 months, right? So as noted in the story, the Fed raised rates about 4.75% over the last year. It's tremendous. That's like breakneck growth or breakneck change in terms of interest rate. And that really changed the whole landscape for a lot of things that were risk on. So like tech stocks, Bitcoin, things of that nature really just like went right down the gutter. That's why Bitcoin is down in many ways, because the change in interest rates. People are not going to be betting on these things when you need cash flows to pay for that interest that before was not there, right? Before you had 0% interest or very low interest rates. Now it's about 5%. If you have a mortgage, you're probably going to pay for that and maybe sell off your Bitcoin before focusing on digital assets again, or NFTs or JPEGs, right? So that's the story here. I do think that we shouldn't go into price talk. That's Wendy's thing. She's not here on the show today. But I do think it's worth noting that like right now, we see these pumps to like, 5K up, like a little like 20% up. That happens during the bear market. It happens especially on the weekends when there's not a lot of volume on exchanges. There's a lot of volatility out there because not a lot of people are interested in the space as much. And that leads to price going up and price going down very quickly. But generally speaking, we're going to stay around the same level for quite a while until this whole macro landscape changes. Zach, over to you.
Yeah, Bitcoin over 20K. I will note that on the price front. Last time we'll ever see Bitcoin north of, I forget what the meme is. There's a good meme that speaks to the impermanence of all these numbers. So just remember that when you see 20K and are tempted to FOMO buy in. I think the thing that Wendy and others say is don't go chasing green candles. And I think that is wise, especially given the broader uncertainty in the market. But yeah, we are seeing some indicators that monetary conditions in the US are changing for the better. And I think we're probably seeing big time actors, sophisticated traders, institutional traders who have sort of, I think, normalized the trading of Bitcoin as it relates to the other sort of risky assets that they trade as well. We may see some activity from them that suggests that Bitcoin will have a bit easier time as the money conditions out there also improve. So this to me is that story again, how we've seen over the last year, 18 months, 2 years even, that Bitcoin has become just like a normal asset class that big, sophisticated, savvy trading firms trade as they would other assets. Therefore, you see the correlation with Bitcoin to these other assets that are risky, right? Previously, sort of Bitcoin thought of itself as an uncorrelated asset. It's not really related to the other stuff in the market. I think that's been pretty thoroughly dispelled if you look at how Bitcoin is traded, similar to the S&P 500 or tech stocks, you name it, right? So whether this changes the dynamic, unclear. I think this report probably suggests further chop, but those are my 2 cents. I'll toss to Adam for last words.
Yeah, let me just put a bow on this thing. So when you're looking at risk assets in markets today, it doesn't matter if you're talking about crypto, doesn't matter if you're talking about houses, doesn't matter if you're talking about really anything. You can think about them largely like corks of different weight. And the water level going up and down is how expensive is it to borrow money? If it's cheap to borrow money, then the water level is rising. If it's expensive to borrow money, then the water level is going down. So that's what's happening. And what the Fed has been trying to convince people of for the last year and into the next year is that things are going to be bad. The water level is going to be going down. So you might as well capitulate and just like give up on it, take your losses, and help them to deflate some of the kind of bubbles that they've really helped to blow. But the problem underlying that is that they don't actually want to do this. They don't actually want the speculation to go out of the economy. They want people to believe that the speculation will go out of the economy, which allows them to accomplish their goal of deflating some of these bubbles without actually doing what they are right now, which is pushing the economy domestically in the US here and around the world really into a pretty terrible recession that will become more apparent over the course of the next year or so. So that's the Fed situation. It's that they desperately need people to believe them, and people increasingly don't because they're lying, because they're not actually going to do it. When you actually start looking at the numbers and talking to traders kind of about this. All of this is compounded by the fact that the debt ceiling is basically, I believe today, the U.S. would officially hit the debt ceiling were it not for what they call extraordinary measures. And extraordinary measures basically means that rather than borrowing new money, they're going to take money, the U.S. government is going to take money that they hold at the Federal Reserve in accounts, and they're going to start spending it. And that actually means that all of the kind of actions that the Fed has been taking to draw down liquidity in the system is actually going to be reversed. And over the course of the next 4 or 5 months, while this debt ceiling fight goes on and while the Treasury exhausts these extraordinary limits, we're actually going to see a stimulative effect coming from that. So it's a combination of all of these things adding together to make it such that, again, I don't care what the price of Bitcoin or anything else does personally, but risk assets broadly, again, using that analogy, the water level is going to be rising. And it will not surprise me at all if we see a series of prolonged rallies. And it also won't surprise me if we see the Federal Reserve come out and do something really scary, because they need to scare markets, because right now markets don't believe them. And if you act wild, then at least people will pay attention to you. Zach. Yeah, Zach, last word for you.
Yeah, last word. I just think it's funny how like you think of crypto as endemic to itself, right? Like things in crypto dictating how crypto does. It's just funny how exogenic, I think that's how you say it, crypto has become. It's so reliant on these outside factors, these macroeconomic factors, and has traded as such for the last couple of years. Kind of wild to me.
The whole
this
world.
Asset class is
I mean, but it's everything. Like that's the thing about it, is it's not about cryptocurrency. It's not about Bitcoin. Everything trades like this because the way that money works has been truly corrupted in ways that now cause everything to care about this stuff.